Is 2025 not a good year for the Indian markets? Can we see more losses? Let's decode everything that is happening in the markets right now. India's stock market just took a serious hit. $248 billion in market value wiped out in just a few weeks. And now things could get worse. President Donald Trump has announced a 25% tariff on Indian exports starting August 1st, one of the highest in Asia. But what does this mean for your investments? This isn't just another trade spat. The US has warned India not just on exports but also on its continued oil and defense deals with Russia. The result? Nifty futures fell nearly 0.6% and the MSCI India ETF slipped 1.5%, and foreign investors have already pulled out over $2 billion this month. Meanwhile, they're chasing cheaper markets like South Korea, where the MSCI Korea index has surged 36% this year thanks to bold reforms. India, by contrast, the MSCI India index is heading for its worst month since Feb. So what's going wrong at home? Let's break it down. India's stock market has been riding high valuations, trading at 22x forward earnings, way above its long-term average. But earnings are underwhelming as well. The two biggest sectors, tech and financials, together 40% of market cap, have mostly disappointed this results season. Add to that high valuations, slowing profits, and the result is this. Founders and PE funds are selling, retail inflows are slowing, and FIIs are exiting. And when buyer-seller incentives flip, markets correct. So is this the start of a deeper crash? Well, not necessarily. Despite falling stock prices, India's equity fundraising is still strong, over $6 billion raised through IPOs, placements and block deals in July alone. There's hope that interest rate cuts and a pickup in GDP growth may reverse the trend in the second half. Emkay Global believes a turnaround is possible by March next year, but only if corporate earnings revive and inflation stays under control. So yes, 2025 is a tough year for Indian equities, but if you are a long-term investor, this could be a moment to stay sharp, not scared. Watch the export sectors, watch the FII flows, and above all, watch what comes next from Washington. Because this time, global politics and your portfolio are more connected than ever. Well, that is all for today. Keep watching The Economic Times for more.